What do you think the market is in? Selling pressure coming, benign condition, VIX at 16 plus as we speak, to Mike's point.
Yeah, unbelievable resiliency and low equity vol, especially when you look at the MOVE index, for example, at 120. That's about 3 times what it was at the end of 2021. So equity vol and credit vol are completely dislocated. Credit spreads remain pretty wide. When I look at high yield CDX, 460, 470, that's a lot higher than it was when equity vol was last at 16. It does appear that we're starting to see the beginnings of middle market defaults. What's keeping the VIX so low, frankly, is just index composition and the dominance of all these large tech companies, which have prevented the dispersion that you need to get realized volatility, and that's when you see the VIX pop. So, our bet here at Axonic is on higher equity volatility as the earnings season progresses.
Do we figure anything out next week in the big picture with these big cap tech stocks that are going to be reporting, along with a whole host of other companies? Obviously, as we said, every S&P sector represented next week.
Yeah, I think last time I was on with John, and he said, you don't want Apple, Amazon, or Microsoft to pull a hammy or blow an ACL, and I think there is a risk of that when breadth is this narrow. There's a lot of risk to a name or two that has been keeping the market up, failing to perform to expectations. So that narrow breadth and that flight to safety in big tech, it is not a sign of strength. It's a sign of fragility, in my opinion. So that could be one clearing point. And then, of course, we have the Fed the week after, which I actually think is something of a non-event, to be honest. Because at this point, it's much more about the long and variable lags of monetary policy than it is about whether or not the Fed's going to go 25. I think everyone has baked that in. It's really about how those impacts of what it's already done start to bleed into growth and earnings growth.
Peter, I appreciate it.